My name is Nigel Ashfield. I'm the fund manager of the Freehold Income Authorised Fund, or Time Freehold as we call it. I studied law at university, trained as a chartered accountant with PricewaterhouseCoopers in London, and then moved to Close Brothers in 2001, where ultimately I ended up heading up the property and tax-efficient investment business until I took that business out and we became Time Investments in February 2011. I've been the fund manager of this fund for over 8 years. We're really proud of our performance in the fund, which has delivered 20 years of inflation-beating returns with very, very low volatility, very steady income returns. The majority of the returns have been delivered through income. We've always delivered at least 4% of income, lowest ever return, 5.5%, and over the last 10 years, we've delivered an average return of over 6%. Technically, the fund is a property fund, but it doesn't share most of the attributes of a normal property fund, market volatility being the main difference. The fund owns 64,000 ground rents, otherwise known as freeholds. These freeholds have leaseholders living in those buildings with leases of usually 100 years and upwards. On each of these freeholds, we receive what is called a ground rent, which is a nominal sum of money that a leaseholder pays the landlord, and that on average our ground rent size is £122 per tenant. We are simply collecting that £122 very efficiently off each tenant and managing the properties for other asset management opportunities, such as putting mobile phone masts on the roof of the properties, building into the attic space, letting out garages or parking spaces, for example. Unusually for a property fund, the risk of default is minimal. At £122 per tenant, the likelihood of a tenant defaulting is minimal. It is hard to foresee any financial circumstance where a tenant doesn't pay their £122. The risk of them doing so to themselves is that they forfeit their long lease. As a result of this over-collateralisation, the ground rents are seen as a very, very stable form of investment, and as a result, the default risk is minimised. Other risks of investing in this type of property fund is that it is open-ended, and therefore money comes in and out, and matching outflows with inflows has to be managed very carefully. This fund has a maximum gearing level of 10%, and at the moment there is no debt drawn. We have a 20-year history of meeting our redemption requests every single month. And so, although past performance isn't any guarantee of future performance, the liquidity of an open-ended fund is absolutely vital and remains a risk for the fund. Investors will take some comfort from past performance, but can't be guaranteed in the future that over 20 years, every single month, we have always met every single request from an investor seeking a redemption. Other risks to the fund, regulation and legislation. There isn't any legislation or regulation expected imminently, but governments may change their minds and new legislation could be brought in that may affect the way that landlords interact with tenants. In a high interest rate environment where the fund is delivering a return of 5 to 7% per annum, it is conceivable that some investors would take a short-term view and seek to move their money out into to take advantage of a higher interest rate environment. We're not there today, and most of the commentators don't see us get into high interest rate environments in the short to medium term. The liquidity of the fund is basically held in 3 parts. I hold 30% buffer, 10% being on average in cash, 10% in a working capital facility provided through an overdraft facility with the bank, and a further 10% which are in more liquid assets which can be liquidated at relatively short notice. Time Freehold's gone through a number of changes recently, and from the 1st of January 2014, the fund is now a non-UCITS retail scheme, or a NERS, basically a fully retail authorised property investment fund, and we have structured the vehicle in a more tax efficient way using what is called a PAIF wrapper, or property authorised investment fund. it's another way of calling an open-ended REIT. The fund has about 3,000 investors, and they are very, very widely spread with no concentrated ownership. In the main, there are a significant amount of pension investors via SIPs or SASs, a number of pension funds, and some family offices. The type of investor that this fund appeals to is an investor who wants to reduce the volatility in their portfolio, is happy to look at property or alternative assets, and they may also be in an income drawdown situation with their pension. The level of income that the fund produces is useful in those situations. The future for Time Freehold is, I sincerely hope, much of the same. Steady, consistent returns, no surprises, continued investment from long-term investors, but very, very steady growth over the next 20 years.